Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
Great news, we've got a sponsor. This show is now brought to you by Miles Franklin. And when it comes to protecting your wealth, you know there's nothing better than gold and silver. That's what I'm buying. I hope you're doing the same. And once you make the decision to buy gold and silver, there's no better place than Miles Franklin. Look, they've been in business 22 years. And the reason I'm a customer is because when you buy, they ship. Go to milesfranklin.com or call them at 800-822-8080 to get a free quote. 1490 WGCH. This is Carrie Lutz. You're listening to the Financial Survival Network. If you think the world is upside down and you're not sure which way it's heading, Chris Mayer has just written a book called World Right Side Up. And he's gone back in history and he's going to explain to you why things really are more normal than you think. Hey, Chris, welcome to the Financial Survival Network. We're really happy to have you here.
Hey, thanks for having me on.
You got your second book out. Tell us how you got into it, when you decided to write this book, and what was your goal?
Sure. It's really, it was inspired by nearly 8 years of travel and research. As I sort of got further along into this, I started to put together a lot of pieces and threads and recognize that there was a huge story here. And so I started to put together a lot of the pieces of the travel I've done around the world into a book, and the result is The World Right Side Up. The main thesis of it is simply that the world that we see now, where China and India and Russia and a number of other emerging markets matter more, is a world right side up, because the dominance of the West is a relatively recent thing. When you look at longer period of time of human history, you look at over thousands of years, for example. China, had the largest economy for a long time. So this was a process that probably began sometime in the Industrial Revolution, where the West started to jump ahead, probably peaked somewhere in the 50s, where incredibly the U.S. alone made up half of the world's manufacturing output, and America and Europe together made up 90% of the world's manufacturing output. But what we've seen more recently, especially in the last decade, is seen much more of a sort of catching up with the rest of the world as they sort of kind of go through their Industrial Revolution. And so it doesn't only just cover the big countries, China, India, and Russia, but also a number of other smaller markets that I cover in the book that are equally as interesting, Cambodia or Colombia or things going on in South Africa. So that's really what the book is about.
It's interesting you talk about the East catching up to the West. I was at a presentation about 4 years ago by a guy named Ralph Winter, runs a value fund, the Wintergreen Fund. And this was at the time the banks were blowing up and people were saying, well, should I invest in Citibank? And he said, well, you could invest in it, but somewhere in note 67 on their financial statements, there's a bomb there that's going to blow up. And he was so spot on. But what he said that struck me and that really resonates with what you're saying is that he said, there's a guy in Asia right now, there's a lot of people and they're living really badly. And now with the internet and with media, they know that you have a refrigerator, you have a washer and a dryer and a dishwasher, you drive a car to work, and you have central heating and air conditioning, and he wants that. Yeah. And that was a realization to me. Even though I had been to China, I'd been to Asia, I kind of just thought, okay, it is the way it is. But realizing that it really presents such tremendous opportunities to everyone in the world, rather than worrying about, competitive trade wars and such. It's like these people need what we've already been producing, what we've got the expertise. They need energy. They need so many things. And it could keep the rest of humanity busy for many lifetimes, just getting them up to where we are now.
Oh, that's exactly right. I talk about this worldwide setup theme in a big picture sense, but you tacked on right away to the sort of tangible effects of it, and that's it. We see more people driving cars as opposed to bicycles, and all throughout Asia, for example. more people having TVs and refrigerators and washing machines, more people living in cities in houses instead of in farmhouses in rural areas, more people eating fruits and vegetables and meats as opposed to a diet that's mainly focused on cereals and grains. And so each of these little pieces of the puzzle present tremendous investment themes off the back of them. So, we see the effect that the shift in diet in China has on the grain markets, for example. It takes a certain exponential amount of grains to grow a kilo of beef. And so we're seeing that effect play out across the globe. And that's just one snippet. I mean, then you talk about all these other items that we're mentioning, just basic consumer goods. And it's having a tremendous impact on markets. And so that's why I call it, that I think it will be the most important investment theme of the 21st century, is as all these other markets which are opening up and becoming freer sort of join the global table.
Yeah, and I see where people are a little scared and nervous about it, because we're also hitting up on resource limits, which I believe are short-term limits. One of your colleagues, Byron King, wrote a paper that the U.S. will become the king of energy production in a very short period of time. And if the government got out of the way and even threw in a couple of tax incentives, God forbid, it would happen virtually overnight. But that's just one example where it's not a bad thing. We need the energy. The world needs it. And yet we're always in this competitive mindset that they're winning, we're losing. And if we're losing, it's really because of what we've done more than what they've done, right?
I think that's right. I mean, there's different ways to look at this theme that we're talking about, this idea. And some people will come to kind of a negative conclusion and say, well, it means that the U.S. is going to be left behind, or that its standard of living is going to fall. But I don't necessarily think that has to be the case. I mean, we have still at this point a tremendous amount of resources in this country, both in terms of human capital and also physical natural resources, energy being the big one now with the shale gas revolution, the oil gas revolution, and so on. So it can be a positive. And I think that bottoms up, there will still be good opportunities to invest in this country that tie into a lot of those global themes. In the book, I talk a little bit about the energy revolution that we have, and so that's a big one. But there are other things. We have coal here. We have a pretty good agricultural center, and the manufacturing that remains here is pretty competitive globally. So, actually, in the book, the longest chapter is on the U.S., which I think reflects the fact that there will still be plenty to do here.
Yeah, and the fact is that in energy-intensive manufacturing, like aluminum, like steel, the fact that we have $2 thousand cubic foot natural gas, and we're going to have it for a long time, gives industries here like such an advantage. So
the revival of the American petrochemical industry is a big one. I mean, anything where you take natural gas and combine it with other things to make a product, you're gonna prefer to be here. And so that's a big that's a big theme that we're starting to see. Petrochemical companies opening up previously mothballed plants in places like Louisiana will be good.
Yeah, we've seen it, and it's so hard to really know what's going on in the world when you don't travel, when you don't go and see what's happening in these countries, because when I was in China, and this was 15 years ago, those people didn't care what we were doing so much. They despised their government. They really just wanted to be left alone to go earn their income, take care of their kids like everyone else in the world. And yet we have this media structure that demonizes, that creates enemies. It's this 1984 Orwellian mindset that really doesn't begin to even hint at the truth. And the internet and publications that you and your company are involved in really tell the story a lot differently and a lot more accurately, I think.
I think that's 100% right. I mean, it's in the interests of the governments, not only our government, but their government, China's government, to create enemies and keep people sort of, under thumb and together. But really the best ambassadors are just people. I mean, it never ceases to amaze me, no matter where I travel, where you meet with someone and if you can just talk to them under knees under table and over a beer or whatever, over a meal, that we share a lot of the things in common. They want the same things we want. They want a safe place for their families. They want the same sort of material comforts. They want friends, and they want to have a shot at succeeding. So that's the real story that's happening. And, I hope that we're able to avoid some sort of standoff with China, which seems to be slowly building over time. And I hope that we're able to come to our senses on these things and instead promote more open trade between us. But, we'll see how that goes.
Yeah, that's anybody's guess. The final chapter hasn't been written, but just on China, there was something really interesting that I saw. Their favorite imported vehicle is the Buick. And which is, in the U.S. Until recently, Buicks were like, okay, so your great-great-grandfather with his oxygen machine loves his Buick. It was no younger person would be caught dead in one. And yet,
Right.
when you go back to the 30s, the Buick was a real status symbol. They were imported into China. And when they were looking at GM to cut lines, they didn't really want to get rid of Pontiac, but they knew that Buick was going to be the brand in China, so they got rid of the Pontiac instead. And now, it's a wild success story in China, and that kind of sums up the whole international trade situation. It's like you really have to be looking at the whole world and not just your little piece of it. And what you think is going to work here isn't necessarily the best thing.
Yeah, and I can think of a number of tangible examples where that's been the case. I mean, I remember in 2005, for example, I started to write about the fertilizer stocks, and nobody had heard of them at the time. They weren't common names like they are now. I mean, Agrium, Potash, and Mosaic, they were really obscure. But if you had followed sort of the international shifts in diets and the need and how the grain markets were sort of pulling, you got a sense that, hey, these are going to be important resources and important companies in the world that's shaping up. And those stocks went up 3-5-fold easily. So that's one clear example where if you had been on a trend early, or you had paid attention to what was going on outside the borders, you could have made a lot of money. And more, when I look at different kinds of investment ideas, I come across those exact stories. They tie into something big that's happening in South America or happening in Asia or in Africa. And if you have a leg up on those things, you stand to make a good bit of money.
Absolutely. It's just the trends, and that's what I like about what you guys do. You really get the trend early, and getting it early and getting ready and hopping on it is really the key to making money in these markets, in my judgment. So the book, it's coming out in a couple weeks?
Yeah, the release date is officially April 10th. You'll be able to buy it anywhere, Amazon, wherever else.
Amazon, I get it on my Kindle too, I take it, because the ebook business is bigger than the paper book business now, which is amazing in itself. A couple of years ago, it was nothing.
That's right.
And you do 2 newsletters at Agora, right?
I write a newsletter called Capital in Crisis, which is sort of the global value newsletter. I can go anywhere and look at anything that to present the best ideas for my readers. And then I write a letter called Mayor's Special Situations, which is more focused on smaller cap companies. Some of them trade on foreign exchanges and so on. So those are the two areas. But the book really ties in with both. There are a lot of ideas and research in the book that come out of both letters, and I've been writing them for almost 8 years now. So it's quite a lot. It's quite a lot of stuff.
Hey, and I'm just going to ask you one final question, off topic, but on topic: investments. I have this theme of dividend-paying stocks because I think we're going back to an earlier value set, a time where what was there really mattered rather than the glitz and the growth stock and the story. People wanted to see cash flow. What's your feeling on dividend stocks? Are we getting back to a time where stocks really will get at least partially valued on their dividend yield, their flow?
Yeah, I mean, I think investors increasingly are looking for dividends, and because just look, in the last 12 years, we've been through 2 separate periods where the market has been cut in half. And so people are looking for I think, more tangible reason to own stock. So if you get paid 3 or 4% even a dividend yield, then you can sort of ride out the bumps and slowly build value. And I think that people are maybe turning away a little bit from those models which were purely growth and that paid no dividend. And we see it now in the blue chips are getting a lot of pressure to raise dividends and do something with their cash. And we recently saw Apple pay a dividend to buy back stock. So that's where the pressure is. And I think it's a good pressure. I mean, I think I always think that pressuring management teams to return money to shareholders is a good thing. Otherwise, we know from history that they will otherwise blow it on things like acquisitions and building their businesses big. So.
Yeah, and the other thing is, if you're paying out a dividend, the last thing you ever want to do is cut it. You're always looking to raise it or at least keep it the same. So it forces them into a longer-term state of mind than just the earnings next month or next quarter or next year. They really have to be thinking about, because you can't fake the dividends. It's real hard to keep borrowing money to pay off a dividend. If you don't have the cash flow, eventually it catches up with you. So it's one of those trends that I'm just following. I've been a contrarian in it for a long time, and it looks like it's finally catching up. So anyway, hey, we're going to look for the book. If people want to learn more about you and your publications, where do they find you?
Well, you can go to worldrightsideup.com. There's a nice page we've set up for the book. I'd recommend that. We're also putting together a live webinar on the book. And we're going to have a special deal about giving away autographed copies and so on. So for more on that, I would refer people to that website.
All right. Been great talking with you, and good luck on the book.
Hey, thank you. Thanks for having me on. It was a lot of fun.
Pleasure.